Good evening. Good evening, Carla. Give everybody just a minute or so to get on here, then we're going to get started.
Show you, and that is, this is wacky. I'm not even going to show with sound. I'm not going to show the full ad, but I'll put up the video so folks have a sense of Donald Trump here on his way out. This video.
Good evening, everybody. Good evening.
Jedi.
I got my volume a little bit. I want to give everybody a minute or two to get in here. I think we had like 6 people signed up to come. Let me double check. Let's see. So we got this one. Yeah, six registered participants. So how is Jim and Carla today?
Doing excellent. Just got in for a nice walk out in the refreshing cold night air.
That's very good.
Which invigorating me. You know, I like it.
Right, I'm totally there with you. Let me grab my notebook here as we're getting ready. Hey there, Kelly.
Yo, yo. Am I muted? Hey, what's up, brother?
Hey, you're here. You're here.
I'm here. I am live. Just checking.
Yeah, we're going to give it just another minute, see if the other person decides to make it that said they were coming. And then we'll get rolling. But there we go. Carla's connecting to audio. And I figured this Tuesday the 29th was a good time to start because it's right before we're kicking into the new year. So a good time to set your intentions for what you want to accomplish next year.
Cool.
Can you hear us, Carla?
Yeah, I can hear. Can you hear me?
Yep, we can hear you.
Okay, I'm going to go on mute now, though.
That's totally cool. We know you're here. So for this, I want to make it more of a mastermind group where we're helping each other out on our different projects. You know, of course, the overall is real estate, but, you know, you've also got all the mindset and everything else to go with that. And, you know, with it being this time of year, right before, you know, before the New Year's, I figured it'd be a good time for all of us to try and set some goals what we're working towards so we have an idea of what we're helping hold people accountable for as we're looking this next year. Before we get into that, I'd like to, you know, do some different introductions and that so we can all get to know each other.
Sure.
Just a little bit. So as you all know here, I'm Jedi Hill, you know, author, and been investing here for a couple of years. And, you know, we're just about in the middle of getting ready to finish the refinance. As soon as we get the last unit that we upgraded rented with me and my honey, and then we'll be looking for another apartment complex. So let's go ahead and start with you, Jim. Brief introduction.
Hi, I'm Jim Lieber, and I live in California, but I spend about half my time in the Cleveland area, and I started investing in real estate about 10 years ago. Uh, I work a W-2 job in engineering and squirreled away a lot of savings thanks to a book I read years ago, Your Money or Your Life by Joe Dominguez and Vicky Robin. Maybe you've heard of them. And I started buying single family homes and acquired several of them and have held them as a buy and hold strategy. They were turnkey properties. So things have been rolling along really well, getting better all the time. I bought one house in New Kensington, Pennsylvania, and we had a turn recently. And as a result of that, the rents went up $400 on top of the already, $700 plus $400. So very pleased about that. And I'm looking to grow my portfolio. My sweetheart and I want to travel the country in an RV. Am I still on?
Yeah, that is awesome. And congrats on a $400 a month residual raise. I mean, how many people get to say you can just raise your income by $400 a month?
Yeah, and that's huge, and that's a testament to it's proof positive of real estate. Rents go up, and it's true, and that serves the owners very well in time. It's a get rich slowly kind of strategy that works in my case. Yeah. And I could go on. Shall I? I don't know.
I just want a brief introduction, so I want to get through.
Yeah.
Let's go to you, Kelly, next.
Hello. Kelly Fisher. I am stress and anxiety coach for business owners and entrepreneurs. I've been a certified hypnotherapist for 25 years. Really looking to take my coaching business to a whole new level this year. So that's why I'm here to, when the money does start flooding in, I know what to do with it. And I educate myself as much as I can on property and really get in the game this year. So that's why I'm here.
That is awesome, Kelly. And, one of the nice things that I know Jim knows about as well is, it's a great tax haven with all the things you can write off. So you're not getting hit Uncle Sam as your other business keeps growing. Are you still there with us, Carla? You ready to go next?
Yeah, I can go. My name is Carla Fisher, when I'm not related to Kelly. And
How about
and my parents did real estate as far as when they bought the house that I grew up in. They had an upstairs, and they would rent that out to people, but with varying results. I mean, I remember once we rented it to one person. By the time they left, there were 10 people up there and a dog, and that was weird because it was like an efficiency. It was like my mother used to call it something. It was the way old houses are made. It's like I forgot the name of it, but it's a bathroom, a kitchen, a bedroom, and a living room. But 10 people wound up living there and a dog. I don't know how they figured that out, but eventually we got a nice tenant who stayed with us for a lot of years. So, I mean, to pay their rent, we had no problems with them. But I see real estate. I'm more interested in like REITs and stuff like that. I would rather invest in that way. Just dealing with people, I'm not too keen on that.
Well, that's okay. And not everybody, the apartment complex we have, we are managing it ourselves at the moment, but we also grabbed an apartment complex that was run down and needed rehabbed because if we didn't get one in that condition, it would have been out of our budget to be able to acquire. Like when this one's fully updated, I expect it within the next year to be worth $1 million for just the one property. We bought it for 360, so still got to put a couple $100,000 into it, but that's a nice chunk of equity you get to force and push into. And once we get it refinanced, we're going to be going to property management there, Carla. So we'll have somebody else dealing with the tenants, and you'll get a better return when you own the property than when you do the REITs. The REITs is
Well,
just,
you know what? I've heard of that also, and I've heard bad things about property managers. You have to stay on them to make sure they don't, neglect your property. So, I mean, you're still going to have to keep your eyes on the ball, okay? I mean, you can't trust anybody to take care of your stuff except you at the end of the day.
oh, exactly. And even with the REITs and stuff like that, you're still taking a gamble on whether you're going to get paid. Right? Like
Yeah.
there
I'm not dealing with
life.
Yeah.
You're not directly invested in real estate through a REIT, though, are you? I mean, it's kind of like a stock market trade. It goes up and down. You could lose money on a REIT because the stock value goes up and down with the market. Like REITs are across the board. They're in shopping malls and strip centers and a lot of different things that you may not want to be in, especially if you look at what's happened in the last year. Shopping malls have just gone south. You totally would not want to be in a shopping mall right now,
No, I'm looking at more stuff like nursing homes and stuff like that. I mean, because people are getting older, and people need some place to live. Sometimes their family doesn't want to be bothered with them, so, for whatever reason, they have to be in some sort of nursing home or assisted living. I don't think they'll be going out south anytime soon.
The camera was off. Apologies. I actually have some other friends. McDaniel, shoot, I'm forgetting what his first name is off the top of my head. He invests into some nursing homes, and there's two sides to the nursing homes. You have the running the nursing home, and you have the company that owns the real estate. The company that owns the real estate in the nursing home, they're set awesome because they're getting paid, say, $1,000 a month per bed, and they have none of the liability for what happens to the people when they're mishandled by the caregivers and stuff. So that's why they split it a lot of times in the two different businesses. And there's social living here, because I know you're in the Cleveland area, Carla. You can actually buy houses that say a 6, 8, 10 bedroom house. So which would be up to like a duplex or even a triplex. And they have the sober living homes where the state will pay for the people to live there per room as they're getting drug courts.
We had a family friend that was doing that. She bought, it was an old funeral home. It was like really, like, I don't want to say Victorian looking, but it was like a bigger, older brick building. It had a lot of rooms in it, and she had it refurbished where, she had people staying there. She had day patients that came, people would bring them in the daytime, and then they would go home with their family in the evening. Then she had ones that stayed, overnight and stuff like that. So, yeah.
Yeah, there's some good profit margins in those. I know I was talking with a couple people here that, they'll actually run the business side of it to take care of the people. So you just get your check for the real estate side. So there's lots of different options. It's just figuring out where you want to focus.
Hey, Jedi, I'm brand new to the game. What's REITs? What are you referring to? What does that stand for?
It's
Real Estate Investment Trust.
Oh, real estate investment trust.
It's basically a group that are investing into a fund, and then other people invest into the real estate. The next level up from that to have just slightly more involvement is what they call a syndication, which means you're investing in a specific real estate deal, like a giant 100-unit apartment complex or a giant hotel or whatever. They get a group of investors to invest on this one deal. That gives a little bit better returns than what the REIT would, and has just slightly more risk, but you also have a little more control. As we're seeing with this pandemic, the most stable area of the economy has been the rental economy. And even with, some people not paying their rents, especially in the high-end market of New York and like San Francisco, the rest of the country's still been hitting within 2 to 3% of its normal rent collection, which is actually really surprising the way everything's been going. But I know that unemployment helps. And I know you've heard about the forbearance and everything, or not the forbearance on that is not the evictions, but the foreclosures going on right now. That is
Right.
to expire, end of March, beginning of April next year for a lot of people, and then tiers of several months after that. I've been talking to bankers on that, and the vast majority of them are on homes under 200K. The people in the lower socioeconomic classes. So you'll have a lot of those homes, this time through the mid to late next year, will be coming through the foreclosure route, where there'll be lots of amazing deals on lower end homes that, while that homeowner might lost, somebody else is still going to want to rent it. So there'll be.
Hey, Jedi.
Yeah.
Well, you might as well just finish your thought, but I'd like to go back to the syndication for a little bit when you're done.
Oh, go right ahead. I was just saying there's going to be lots of deals in the single family in the low end market.
Yeah. On the syndication thing, there are general partners and limited partners, and the general partners generally are the ones they're the ones that drive the entire investment portfolio. They decide what houses or what multifamilies they're going to bring into the fund, and then the limited partners are the people that are more passively interested in making money on real estate, but without doing the actual work. The general partners do the management, do the rehabbing, collect the rents. They deal with the day-to-day businesses of keeping this thing going. The limited partners, and I'm looking into joining one of these myself, so I'm getting kind of educated about it. This is a portfolio of 120 homes, 120 doors, a mix of single family, duplexes, triplexes, and fourplexes in Pittsburgh. And it'll be passive income for me with a return rate of about 14%. It's going to fluctuate. But as the years go by, rents go up, the returns will get even better. So syndications are really, if you're looking for passive income, syndications are something to look at. Absolutely, I think. I've done single family homes with other people managing them, and that's worked out just fine for me. Because management knows how to screen for tenants. They do background checks and make sure their FICO scores are correct, and they haven't had any evictions on their record. And I have not had too much trouble with tenants, interesting enough. Sometimes, Jedi, I think you had some tenants that you inherited that didn't work out so well, but now you have control over the new tenants coming in, because you can vet them. Yeah.
Exactly. We do criminal background checks that I was actually pretty impressed how extensive they are, as well as the credit checks. My honey's got like the scales of where their credit needs to be to whether you'd approve them or not. But
Yeah.
then you're doing the background check to look for the evictions, domestic violence and anything else that might be, I don't want this person as a tenant.
Right.
And if it's something where, oh, you wrecked a car 20 years ago, whoop-de-doo, we don't care. But if you're robbing your neighbor 6 months ago, we don't want to deal with it. And you got to look, and this is where having the management does come in handy for a lot of people, because there are a lot of rules on what you can say for why you deny somebody, or, because you got to be so careful with what you say on things nowadays. It's ridiculous. But yeah, like with this triplex here, we inherited amazing tenants. They've been on time every single month, haven't really spent but maybe 4 hours in a year and a half for having to take care of any little issues they had. The apartment complex, we did have to get rid of a couple people there at the beginning, and we had one just leave at the beginning of December on us without notification. That one's actually really a blessing in disguise, because it was the largest apartment in the complex. So we were able to remodel it from a 2-bedroom to a 3-bedroom. And we'll be able to take that from them paying $575 a month to currently asking $900 for the new tenants that will hopefully be coming in by the end of the week. So yet again, a nice little raise for just a little bit of headache.
Let me ask you a question. Have you ever done anything as far as like my mother used to be a real estate agent also when she retired from her job, but she had a lady that was into Section 8 real estate, dealing with Section 8 people. Have any of you all ever done anything with Section 8?
I have.
Uh-huh.
Go ahead, Jim. I personally can't stand Section 8, but
I have, and the only reason is because the management's been able to push the paperwork and get it all smoothed out, and it's been okay. I have 2 currently that are on Section 8, and they've been there a long time. I don't think they're going to. Why would they move? They've got a good deal. They've got quality housing at affordable prices, and the management, inspects now and then. The people are required to pay like $130 out of the total rent. The rest is picked up by the Section 8 program. So, and then I got to say, I think they don't always pay their $130 portion. That does happen. That's not so fun about it. Then you have to decide, what are you going to do? What are you going to do with them? Because they're not paying their part. What are you going to do?
That's you're bringing up a very good point there for the Section 8. They do have where they have to pay their part. Now, the flip side of that, like when you're looking in areas like the east side of Cleveland and Detroit, Chicago, and other bad neighborhoods, the Section 8 is paying 20 to 30% higher than what market rents are. So a lot of the landlords I know that do accept Section 8, they don't care if they get their other portion. They just factor in that any of that is just a bonus.
Oh.
Because they know when you're in the low socioeconomic areas, you're dealing with a lower quality of tenant, and they're likely not going to pay their part. So you just have to deal with it. If you own a house, you can buy a 3-bedroom house in East Cleveland for $20,000 to $50,000. A mortgage payment on that is $250. You can Section 8 it, and they'll get you $800 a month for Section 8. So you're still looking at 600 a month if the people aren't paying their portion, and you just have to deal with whatever damage they might do. And they could potentially lose their Section 8, but Section 8's not paying for it. So it all depends on where you're at. I've tried to get to areas where it's better, decent neighborhoods so I can get a higher class of tenant. But you also have a little bit lower profit margin when you go into the better areas. So there's all...
Okay, well, let me ask you this. Why doesn't the government, if the government is sponsoring this kind of housing, why don't they require the tenants to be more, I don't know, upstanding or whatever, as far as, $130 a month is nothing, okay? I mean, to me, that's nothing to pay. I mean, to me, wouldn't you be grateful to have a roof over your head as opposed to being out in the street? I mean, $130, is that, I don't understand.
Oh, there's some, they factor based on your income, and they might only have a $20 a month copay, and there's still a large portion of them that don't pay it. That's where landlords have such a flip-flop between liking Section 8 and not, because from the Section 8 you get the government's paycheck every month, but you also deal with the lower quality tenants, and if they have any copay, you might or might not get it. That, and you have the increased odds of doing damage to your property.
Okay, but why doesn't the government require, like you do background checks and stuff on people? Why doesn't the government say, okay, are you drug free? Are you employed? Or, just common stuff, Why, or are they not required to have these kind of things when they move in Section 8?
Well, no on the drugs, no on having the job. If you have a job, you're actually less likely to get the Section 8.
Oh, I see what this is. Okay. They're trying to keep you down. Okay, gotcha.
Like if you're not on welfare, your odds of getting Section 8 are not as good. And if you're somebody that would rather live on welfare, that's just the type of people you're dealing with.
Okay. My father used to tell me this when I was a kid. He used to say that the welfare was not meant for you to be on forever and ever. That this is, people are just taking it and like making it a legacy and passing it down to generation to generation. And it's not really, it was never set up for that. If anything, it was supposed to make you want to get off of it as soon as possible. And they came up with it. So
yeah, but the people feel they're entitled to their welfare now because they've lived with it for 2-3 generations. Now I admit I was looking at an apartment complex in the east side of Cleveland that fell through because it was like 90 units. Mm-hmm. And had I been able to get that one, absolutely, I 100% would have Section 8 that building. Because even the cops don't want to go to that part of town.
Wow.
And it's like, but we look at this pandemic, that guaranteed rent seems very appealing.
Yeah, it's guaranteed rent by the government. The government's going to pay. It's going to be there every month. You don't have to worry about it. That's the attractive part of it. But there's a built-in incentive to be a good tenant because these people have to wait on a list. It could take 2 years before they ever get approved for Section 8. And once they do get approved and they get a place, they don't want to lose it, So there's like an incentive there to maintain the property and to be respectful and do everything according to the rules. That being said, you're dealing with some kind of, people don't have their heads are a little not right sometimes, and they're not thinking logically like I just laid out you would expect people to think like. So they might have, maybe they have kids, they have dogs, they have exes in there, they have their husbands that they never reported that, now they're living with them, they shouldn't be living with them. So you're adding to the wear and tear on the property. So there's a lot of considerations. And I had one, the teenagers were left home. They left the whatever on the stove. It started a fire. There was a fire. We had to throw out the stove and the hood that went along with it. The whole thing needed to be cleaned. And I was left holding, stuck with the bill because, it's just, these things happen. But, we're over that, and now they're back on paying the rent every month. It's okay.
I mean, well, what do
some
you
headaches.
do well, what if you do, like you said, when the person has somebody there that's not on the lease and they're living there now? I mean, that they're,
Right.
how the eviction, how does that work?
Um,
Or like, is that a lease breaking situation,
I don't know.
or what?
You can evict them, but I leave it to management to make those decisions personally. If they find out about it, they certainly are. It's within their right to evict them, but it's a hard thing to prove. The same thing with pets. It's a hard thing to prove. You don't allow pets, but they have them. Well, how do you prove that? And then you have to take this all to a court, present it to a judge, and I don't know. It gets
Well, since we're getting into the court and the evictions, you getting the eviction itself is not that hard, but when you're doing it as a business, you have to hire an attorney. You can't just file yourself. And you want to make sure you're doing it under an LLC to reduce your other liabilities. So you're increasing your costs there a little bit. Yes, you can sue them for damages, but just because you win the judgment doesn't mean they're going to ever pay you. And I know in states like PA, you can't garnish wages or anything else. So there's really no recourse for a landlord to get after it. And when you're dealing with the Section 8 people, just the threat of eviction can a lot of times get them to trash their property because they know if they get evicted from Section 8, they cannot get back on Section 8. So they don't care.
mm-hmm.
So it's like, do you just deal with the extra little bit of wear and tear on the property? Or do you deal with an eviction and potentially have your property completely trashed and take you to a point where it's going to take you 5 to 10 years to recoup that cost?
So a lot of them already know this about Section 8, so that's why they figure, well, I can just do what I want to do, and you have no recourse. You can't really stop me.
It's a lot of that attitude. A lot of it's they don't care. And these are not people that are right in the head.
Yeah.
And you have, okay, I'm going to pick on because we know a lot of this is single moms that are in these categories. They have multiple baby daddies that are coming because they, had to have multiple kids to get the extra help from food stamps and everything else.
Mm-hmm.
And like nationwide, in the normal populace, 1 in 3 women over the age of 35 is on some form of psychotropic drug.
Wow.
Alters their moods and things like that. In that section of the population, I've known thousands, and I guarantee you it's closer to 2 to 3 or 3 out of 4.
Okay.
So you're dealing with a certifiably crazy populace.
Wow.
And granted, I know people like Kelly that know, and Carla, with a little bit of mental discipline, you can get over that. But if you're not willing to do the work, there's nothing you can do. But this is where, like what Jim does, is having management deal with those issues so you don't have to, so you can keep your sanity and you can just keep collecting that paycheck every month.
I mean, sometimes, I get the paycheck part of it, but to me, some of this seems like, it's an easier way to get a paycheck. You know what I mean? This is a lot.
There is quite a bit of work because you have to, brief rundown, you have to find the property. You have to negotiate the price and get it under contract. You then have to have down payment. get a bank loan, hard money loan, loan from a friend, whoever, to come up with the rest of the money, buy the property. If it's turnkey, fine, you can rent it out. It might already have renters, or otherwise you have to do rehab on the property, and then you start bringing in income. But it's not just about the monthly check. Like, say you buy a house for 50,000 and you have to put 20,000 into it. Well, now you're at 70,000 into the house, but okay, the actual market over here is worth 100,000. So not only are you getting your little few hundred a month profit, you just made $30,000 here in the course of a few months or within a year or two. And if you do that on bigger properties, these margins can be like with the one we're working on. We bought the property for $360,000. As soon as this last one's rented out, it's going to be worth around $750,000. So
Is that based on the income that it'll be producing, or is that an appraised value, or?
That is based on the income and cap rate. Yeah. At a 10 cap.
At a 10 cap. Okay.
Yeah.
So it'll be generating about $7,000 a month income. Is that right?
Yeah. The net. Let me see here. What was that?
A 10 cap on 700,000 is $7,000, right?
Let me double check this here. My mind's it's late night. I'm just going a little slow here. Let's see. So that would be 75,000 divided by 12. Actually, that's about 6,300 a month for the net.
And that's all expenses have been paid except for the mortgage.
Yes.
Yeah, you still have the mortgage to pay.
But that's, and that's the process. We'll be able to, like with the refinance, get all the money we did to repair, and then have the money back to now we can then buy another apartment complex while still getting a monthly check. And the way it works is you don't pay cash on borrowed money. So say you had that 50,000 for the house, put another 20,000 into it, and it appraises out for 100,000. Your typical, you can pull out 80%. So you made 10,000 in your pocket off the top, plus you got your 70,000 you put into it back, and you're still getting a monthly check. So you can do it again. And you do it again and again. Because the object is, where do you want to get? Where you're getting residual of 1,000 a month, 10,000 a month, 100,000 a month. And you can do that over a period of years as you build and grow into bigger properties. And it's also the tax haven abilities. You have depreciation, where you can write off a percentage of the property's value every year and just wipe it off your taxes. All these little things that happen, like where Jim had to do repairs for the fire. These are all tax write-offs. You get to write off the interest on your loans. You get to write off the insurance. You get to write off the property management. You get to write off so much of it. So on paper, for Uncle Sam, you're just getting cash flow moving through. You technically didn't make any money. Even though you're putting 5 or 10 grand a month in your pocket, on paper, it's looking like you're making nothing.
So on paper, you're a pauper. That's what it is?
On paper, you can look kind of like a pauper, yeah.
Okay.
You can keep the margins. Like, and I know one buddy who's started out with the homes, and he did it for years and years, and he got into the stocks and other stuff. It was enough that when GM got bailed out, he was one of the main stock people that had to sign off for GM to get the bailout to lose money. And that was just with doing the same thing, the one house at a time and building up to bigger. So you can do it. You also have fun things with real estate, as long as the Democrats don't try and destroy the country this next couple of years. specifically the 1031 exchange. And what that is it's a tax deferment. So say you have that house for 100,000. You can sell that house, and whatever profit you had, as long as you do the special process within like a 90-day period and wrap it into another property that's worth at least that 100,000 or greater, all the profit you made from that first property is tax deferred and is wrapped into the next property. So you pay no taxes whatsoever.
Okay, isn't there something, I saw something on YouTube where the person said they lived in, I think, Thailand or something, but they have something where they only stay someplace 4 months and then they move and they stay someplace else they're not like, they don't have like a permanent residence. They keep moving around or something. So they don't get taxed or something like that.
I know there's all kinds of ways people try and get out of taxes. This is stuff you'd want to talk to your accountant. That's all within the U.S. tax code. And when you're trying to deal with other countries, I don't have a clue how their tax laws work, because very few people.
I mean, he was from here, but he moved over there because he was saying something about how some ways if you don't stay in a residence for so long, you can there's some kind of tax benefit from doing that or something, moving around.
Yeah, I'd ask an accountant on that one, because that's not one I would know. It's not specifically in like my niche with the real estate.
Could I just share a story that I just experienced? I just found out. Okay, so let me back up. I'm trying to refinance one of my properties so that I have enough money to get into the syndication. And the lender told me that I needed to show more income. And I'm doing that by applying for Social Security. So I'm just about, I'm applying for Social Security. I'm going to be getting a nice amount of money. And I find out that, so when you're on Social Security, you're allowed to work, but anything over a certain amount of money that you make, you have to pay back to the IRS. Like if it's over $18,000, you have to pay, out of every $2 you make, you have to pay the IRS at $1. Now, that rule does not apply if your income is coming from real estate. I was overjoyed when I heard that, because all this money that is coming to me every month by way of real estate doesn't count towards that rule where I have to pay $2, pay $1 for every $2. That's a real tax benefit to me.
Mm-hmm.
Real estate is the way to go when you're looking at taxes. It's Robert Kiyosaki goes in depth in that, in Rich Dad Poor Dad, etc. All his books. Right, Jedi? Isn't it?
Yeah,
do I have that?
Absolutely. If you have not read Rich Dad Poor Dad, I totally recommend it. It is a storybook that teaches you accounting and makes it fun.
I mean, I've read it. I've met Kiyosaki. I met him in Pittsburgh. Like I say, I just have, from growing up around the little bit of real estate that my parents did, I see the work that's involved in it. You know what I mean? And I mean, I grew up in a working class neighborhood. We weren't in the slums or anything like that. But you're dealing with all kinds of people, all kinds of personalities, and it's a lot.
Oh, a lot of pathways. Many ways to do it.
We're not going to lie to you. This is not some easy, oh my God, you just wave a magic wand and you're rich. And there is a lot of work, but it's one of the simplest, surest paths too. Look at McDonald's. People think they're about selling burgers, but where they're actually making their money is in owning the real estate. Even when they franchise it, they're leasing it to the franchisees and getting the monthly rent check. That's
Yeah, I
where
saw that in the movie. Yeah, that movie that Michael Keaton did about the guy that came up with McDonald's, the founder. That's a good movie.
I still haven't seen the movie. I just know from the history. So, we are getting towards the new year, and I would like to help, with the collective energy, set some intentions. What would you like to achieve this next year?
I haven't thought that all the way through yet. I want to get more into the business that I'm trying to start as far as holistic health and healing, because ever since this pandemic, it's about health, health, health. I think that's the way to go these days. So I'm looking more into that. Like I say, real estate, I'm dipping my toe in with these REITs. So I'm trying that. I've always, if I was going to go into real estate, I always was looking at commercial real estate, like people need space for beauty parlors, barbershops, stuff like people that do business, laundromats, you know what I mean? That kind of stuff.
Well, the commercial, what I can say for that, personally, I'm not, like, the apartment complex is commercial real estate. Anything more than 4 units and down is residential, 5 and up is commercial. I have looked into some mixed use buildings where it'll have like a restaurant or something down below, or your barbershop or whatever, and then you have apartments above it. That's one option to make it a little more stable. But a lot of your small mom and pop shops are going under. And I can see a lot of that real estate going for fire sale in the near future. But to play in that game, like if you wanted a small little strip mall, that small little strip mall might be $2 to $5 million or even $10 million. And to have that, with commercial, they want 25 to 30% down usually. So even if you're looking at 5 million, it's like, do you have $1.5 million in your pocket to invest to get into the property?
I'm not thinking so much of strip malls. I'm thinking a lot of neighborhoods are what they call it gentrified, gentrification, whatever. Where people are having the stuff in the neighborhoods. They got the local barber. That's like the way it used to be.
The old
you could just walk down the street and go to eat at a restaurant in the neighborhood, or go. What is that noise?
You just have to run your numbers and look into it and see how much risk. Like, the restaurants, personally, I would not want to own a building with a restaurant in it right now. Unless it's barbershops and things like, I'm so much now is going online, which is why I personally focus on, residential rentals, because people are always going to need a place to live. So it has more security, like office spaces and stuff like that. Look at what we're doing now. We're all doing it online. Like I haven't got to even cut my hair in months because I haven't found a barber that doesn't want you to wear a mask yet. I know a couple, but they're a bit far of a drive for where I want to go.
Within the commercial real estate space, there's 2 areas that I hear talked about a lot, and that is self-storage and mobile home parks. Mobile home parks it makes sense from the standpoint that as the middle class gets beaten down, they're going to be they're going to be stepping down into a class below where they're used to living. So people that were living in A class are going to be moving into B class. B class people are going to be moving to C class down to, D, and mobile homes are at the bottom, kind of, sort of. But that's going to be, the last of the affordable housing. So that's a good thing to look at. And most likely you're not going to have enough money to do that on your own. You probably need partners, to get that going.
And that's
Um,
more towards your syndications. I did find interesting because I have looked into some of these. Syndication is registered with the SEC, and it's just the contracts are like tens of thousands of dollars. It's insane to do all the filing and everything else you have to do. But if you keep it 5 investors or under that are each investing 100,000 or less, you don't have to do the file with the SEC, and you can do a simpler contract.
hmm.
Just,
Oh,
just for reference on that, because I asked my lawyer about it. I had
huh.
my contracts for other stuff. So as long as you have 5 investors or less, so if you're looking at that, say you, Carly, you only had like 10 grand or something throw in, but you got 4 buddies that got 100 grand a piece. That gives you 400,000, which means you can get a property at almost 2 million.
Yeah.
Okay.
And that's
Okay. Yeah. Go ahead.
well, and that's the thing with real estate. Your big keys are OPM, OPC, leverage. Other people's money, other people's credit. So it's not just you doing it on your own. You're building your teams, your networks to grow through.
Okay. I want to piggyback on what James was saying about the mobile homes. Is there I think that these people now are building, they're not mobile homes, but they're like tiny houses. I think that's what they're called. These
Yeah.
tiny houses. Is that going to be a new market that's coming through with people for people who are what they call minimalists, that just want, just enough space to live, and they don't need a big giant mansion or anything like that. You see the trend going towards that, the tiny house
Oh,
movement.
I do see a lot of trend in that for the affordable housing. IKEA just did an article that they have their own miniature tiny home with solar panels. It was like 240 square feet for $47,000, which would give you, a mortgage house payment of around $200 a month with current interest rates.
For 30 years or less than
Yeah.
30 years?
For a normal
30.
30-year loan, yeah.
Oh, yeah. I think the desire with tiny houses is to live mortgage free, and that's very appealing to the younger generation, the millennial type class. They don't want a mortgage. They're not buying into that 30-year mortgage idea. This is a way to achieve that.
The issue is the regulatory, depending on where you're at. I saw stuff in Massachusetts get shut down that had built tiny homes, but yet you find other parts of the country that are more welcoming to it. I do know here in Ohio, if it's under 400 feet and it is on a movable trailer, so it has to be wheels to where you could literally drive it away at a moment's notice. You don't have to have all the building and zoning codes, and you can get away with it. So you can do like the mobile home park and have a concrete pad with water and sewer hookups hooked up to the tiny home. As long as it's a tiny home, you could drive away, and you can get around quite a bit of regulation that way.
Now, the way to profit from an investor standpoint with tiny homes, it's a little tricky because you've got a whole bunch of different zoning regulations depending on where you live. I went to a tiny home festival in San Diego and attended some workshops. Things are changing in California, especially out there. They're breaking away from the one house on one lot model that we're all so used to, and they're allowing homeowners that have a house to add an accessory dwelling unit on them, they're calling it. And then of course you can rent that out and profit that way. You're turning your house into a duplex. But if you're looking at maybe a half a dozen tiny houses on one lot, you need to have that zoned as a mobile home park. which is much more
Okay.
difficult. You
Yeah,
can't just
they're
buy
not
a
making
piece
any-
of property. What's that?
Yeah, they're not letting any new mobile home parks be zoned anywhere in the eastern half of the country that I know of.
Yeah, okay, okay,
Your loophole to that one are the RV parks.
okay.
You know, the campgrounds with the RV hookups, which I've actually looked at potentially buying a few campgrounds before this COVID hit, and I'm hoping they get hammered hard enough that in another year or so they might be dropping price enough to be worth buying.
And I also
Camp-
heard that the people are like leaving California, like about 100,000 people a year are leaving California because of the real estate prices and stuff. They're moving to like Texas and places like that. Now, is that like just hysteria, or is that really actually happening in California?
Oh, it's most definitely happening for both
Yeah.
Cali and New York. They are leaving the big city. Just in the last 6 months, there's been almost 250,000 rich people leave New York City.
Wow.
And this is because what we have right here, they don't have to be tied to the location for their job now. People like
Okay.
Facebook, Twitter, and everyone else, and you can go rural. And you know, James is coming from Cali, and right here in the Northeast Ohio, Western PA is some of the best places to invest right now in the country. And the prices are starting to go up because we're having so many out-of-towners, Israelis, China, and so many others start investing in the area.
Okay. Okay.
But we're going to have to wrap it up here for the night. We are going to keep doing this on a weekly basis to connect and help each other learn and grow.
Good.
So I'm gonna
See you next week.
Yeah, see you next week. Blessings, everybody, and Happy New Year. Write down your goals. I'd love to hear them next week.
Happy New Year to both of you. Thank you. This is very interesting. I don't know if I'm convinced about getting into real estate, but it was interesting.
You know, it's not about, you know, being convinced. Learn, watch, and see what happens. And it's a lot. You know, 9 out of 10 millionaires in this country have either made their money with real estate or are using real estate to secure their fortunes.
I might have to hang out with you one day, Jedi, and shadow you while you clean up a house or something, or rehab something.
If you look at where the money flows, everybody has to live somewhere. They're all paying at the end of the month. They're paying someone. You want to be on the receiving end of those checks. It's so easy to figure out. You want to be on the receiving end where that money's going. And the trick is you didn't learn this stuff in school, but yet there's an education available to everyone online through various sources like this that will help you get there. And you can do it, and it's worth pursuing. Absolutely.
All right. You know what? You convinced me. I'm going to think about it. I'm going to start researching it. Because I met somebody else, I think either 2018 or 19, they were in some kind of meetup on meetup.com that would deal with real estate, REI, something, Riano or something like that. And they were starting to buy property. And they were telling me, yeah, you should get into that. I don't know.
Back in 2008, 2018, I was homeless, sleeping in my car.
I know.
Finished my book. You know, we got this house here a year ago in October, got an apartment complex in June. My honey was able to quit her day job with Cleveland Clinic.
Yeah.
And now we just have this. And let me stop the recording here because I don't want this to be on the recording.